Hey there, I'm Emily Duplessis from Rental Rookie, and today I'm going to answer the question, what is a 1031 exchange? Now, a 1031 exchange is a strategy that you can use as an individual who owns a property, and it is a tax benefit for you to run a 1031. And basically what happens is the whole idea behind the 1031 exchange is that the IRS actually is favoring investors in this sense, because what happens is when you sell a property that was a true investment property, typically whatever gains you make on that property, what profit you make on it, you're going to have to pay capital gains tax due after the sale of the property. Now with a 1031 exchange, what you can do is you can take those gains that you earn from property A and you can roll them into a purchase of property B. Now what we've learned, because we've actually just recently done a 1031 exchange, what we have learned in the process is that there are a couple of things that you have to be aware of with the 1031 exchange. One is that when you take your gains from the first property, property A, and you roll it into a second property, the price of that property has to be higher than what you sold your previous property A for. So let's say you sold property A for $123,000, then the purchase of the next property needs to be property B needs to be higher than that. So you can't, let's say, sell a property for $120,000 and go buy a property for $50,000. Another thing that we learned in the process of doing a 1031 exchange is that when we took our gains from property A, we were able to roll them over into multiple properties. So let's say that you found, that same $123,000. Let's say you found a property for $80,000 and you found a property for, let's say $70,000 or $60,000. You could roll the money, the profits that you made from property A into both of those properties. So that was something that we learned along the way in doing a 1031 exchange. The other thing that I'll mention that we learned in the process was that whenever you do a 1031 exchange and you close on the sale of your current investment property, the profits cannot come to you. They have to go to a third party, an intermediary company who holds the funds and then transfers those funds to your title company or, lawyer, whoever's doing your closing. You can never touch that money in a 1031 exchange. So that was something else that we learned in the process of doing a 1031 exchange. It's definitely a great strategy to use if you're an investor and you're looking to grow. Now, ultimately, it's really kind of like a delayed paying the gains on the paying the tax on the gains, because eventually when you cash out at some point down the road, you're going to have to pay capital gains tax. But the reality is it's a tax favorable option for you when you're in the beginning and you're trying to grow as an investor. So definitely something to consider. You're still going to want to check with like your CPA or guidelines, because as tax reforms happen and taxes, changes in tax law, there could be changes with the 1031 exchange, but current recording, that's the way that it is running at this point. If you're looking to learn more, you can head into the rentalrookie.com pro membership, and there we have a course coming out all about 1031 exchanges. So hopefully we'll see you in there.